Good morning and welcome to 5 Before the Bell, TheStreet.com's daily market preview and European market update right here from the heart of the financial district in central London. I'm Martin Bakkerdax. I am the London Bureau Chief here at TheStreet.com. I'm going to take you through those 5 things you need to know before the bell. Now, the one thing you do need to know before the bell, or the one word you're going to hear all day today, is Apple, because their blowout Q3 earnings have lifted sentiment all around the world and have really set the tech sector on fire. However, here in Europe, we are on the back foot. What's the reason for that? The surging euro. Let me talk you through it. Effectively, we had a really good session overnight in Asia. We had the Nikkei rising firmly, and we had tech shares in the Asia space rising to their highest index level in 17 years. And this was, of course, off of the back of the Apple beat and their robust Q4 guidance. However, that didn't bleed in as strongly as we would have liked into European trading. The euro was trading at a near 2.5-year high against the US dollar. The dollar index is in the throes of its longest losing streak in 6 years, and the fact that the euro is surging so quickly is tampering gains for European stocks. And it has to be said, today's earnings space wasn't particularly spectacular. Rio Tinto, one of the biggest mining groups in the world, missed on its bottom line, and even though it's going to pay out a record $1.10 dividend, shares were on the back foot. We also had a series of misses from regional banks, Société Générale in France and Commerzbank in Germany, the second largest lender in the number 1 and number 2 economies in Europe, both missing after restructuring charges and their shares falling pretty hard as a result. It's very difficult for some of the suboptimal lenders in the European space to make money these days because, of course, of the negative interest rate environment and the fact that inflation is so tepid and the yield curve in government bond markets is so flat. So we are looking at red across the board. Even the pound is climbing. We're trading at the 132 level against the dollar. That's holding down gains for the FTSE. So while the underwriting economic fundamentals are pretty solid, at least in Europe, less so here in the United Kingdom, we're not getting the spin from the Apple results as we would have hoped, and as a result, we are trading in the red. However, Wall Street is still called a little bit higher. Now, one of the big stocks in the United States in the red this morning in pre-market is AMC Entertainment. They are the second largest movie chain operator in the United States, and last night they warned on their Q2 earnings, which they will report fully on the 7th of August. They anticipate a much larger than expected earnings per share loss of between $1.34 and $1.36, well past the penny a share loss that investors were looking for. Revenue is going to come largely in line with expectations, a little bit softer at $1.2 billion, but they're looking at significant declines in the U.S. and North American box offices. In the U.S., it's going to be down 4.4%, and that is going to hit the bottom line as well as some major restructuring charges. So the shares are marked actually 25% lower in pre-market trading. They've fallen 38% so far this year, and they look to have lost about 2/3 of their value as a result of some significant declines. Now, one of the interesting sidebars to this story is that the controlling shareholder is the Dalian Wanda Group, which is a Chinese investment firm owned by that country's richest man. Now, there are several reports, Bloomberg being the first to say so, but others have followed along, that suggests that Dalian Wanda Group has fallen foul of officials in Beijing for some lending practices that the government is now scrutinizing. And as a result, there is concern about some of the acquisitions that AMC Entertainment has made as a result. Now, AMC is insistent that they operate individually and fully separate from the Dalian Wanda Group, and that they fund these acquisitions on their own. But they have been expansive, and they have raised questions about the Dalian Wanda company's investment and its influence over the group. Furthermore, the Financial Times today is reporting that the Trump administration is looking at enacting some sort of trade sanction against China as a result of its intellectual property practices. We don't know exactly how that's going to play out, or indeed if it will at all. But nonetheless, the fact that you have a China development, a China controlling shareholder, and an earnings warning from the AMC Entertainment Group, that's enough to put the shares on the back foot, as they are 25% down in pre-market, going to open at a record low, and that will take the year-to-date loss, as I say, past 60%. Now, one company that is not giving us losses, not giving us disappointment, and in fact really igniting tech sector and indeed broader market sentiment around the world is Apple. The world's biggest tech company is likely going to open at a record high today and trade north of $160 a share. That will give it a market value of more than $800 billion, and that is more than Amazon and Exxon combined. It is just a astonishing company and a really stellar success story. Q3 earnings much stronger than anticipated. They beat on the bottom line by about 10 cents per share with a $1.67 EPS. They also beat on the revenue line with $45.4 billion in sales over the 3 months ending in June. Now that was a 7.2% gain from the same period last year. Most importantly, however, their guidance into the fourth quarter, as we talked about yesterday, was very robust. They anticipate revenue in the $49.2 to $52 billion range. That is higher than analysts have been looking for. The midpoint for them was somewhere around $49.1 billion. So this is at least a tacit suggestion from the company that the speculation surrounding any delays in the iPhone anniversary launch were just that, speculation. It doesn't look like it's going to be delayed. The technical considerations are still being ironed out, of course, and we don't know what the phone is going to look like. But the fact that Q4 guidance is so robust suggests that the company is going to be on time. That means an iPhone launch in September, and that is going to mean incremental gains for Apple shareholders. Stock is expensive. It has to be said. It's trading at about 17 times forward earnings, but we're looking at earnings per share growth in 2018 of around 20%. So it's still a compelling story, particularly when you look at the cash pile, which is getting nearer to that $300 billion mark. The shares are called higher in overnight trading. They were called higher this morning in pre-market, and they traded 6.7% higher on the Deutsche Börse. So we are looking at something north of $160 when we start trading today. And as a result, it's going to become the most valuable company in the United States. So just a true success story and really quite an astonishing one at the same time. Now let's have a little fun with this, because what we are talking about now is the man behind me. He, of course, the gardener from Greenbow, Alabama, Forrest Gump. He famously was put into his Apple investment by his Army buddy, Lieutenant Dan. They did this after their Bubba Gump Shrimp Corporation cornered the market for the seafood industry in the state of Louisiana after an epic storm. Mr. Gump retired back home to Greenbow and sat on the money that Lieutenant Dan invested for him. Now, I dug out the letter that he supposedly pulled out of the mailbox in the Oscar-winning film in 1994, and it is dated in September 1975. That's a bit fictitious because the company wasn't incorporated until 1977 and didn't float on the stock exchange until 1980. However, if we were to do a little bit of mental arithmetic around this fictitious character, his media profile, and his austere lifestyle, we could probably come up with a sum that these shares would be worth. And here's the thing. He probably had a very comfortable income around 1980 when the shares floated in Apple because, of course, they had cornered the shrimp market in Louisiana. The Louisiana seafood industry is worth about $1.3 billion a year, according to state officials, and of course they would have had the market cornered. Back in 1980, that would have been worth about $400 million, which means his annual income would have been comfortably $10 million. Let's say they put $500,000 into Apple on the day of the IPO, which is very likely indeed. With reinvested dividends and capital gains, that holding would be worth $175 million today. That is really not doing anything else at all, simply being a passive Apple shareholder. However, some estimates have said that because he might have been an angel investor in the Apple Corporation, and the letter that he pulls out of the mailbox does seem to suggest so, he could have taken as much as 3% of Apple stock at the time of the IPO. The IPO in December 1980 created 217 millionaires, including the founders Steve Jobs and Steve Wozniak. A 3% holding in Apple back in 2015 was worth over $7 billion. A 3% holding right now would be north of $10 billion. So it doesn't hurt to be a gardener from Greenbow, Alabama. If you simply had invested around $500,000, which would be a small portion of your income in 1980, you'd be sitting on 175. But as Mr. Gump told us, you only need so much money and the rest is showing off. Let's take a look at Wall Street now, because we are going to open higher. In fact, we're just a couple of points shy of the 22,000 mark according to U.S. futures. Apple, of course, is a Dow component, so it may drive us into that new barrier at the start of trading, but at the moment at least we're looking at about 1.5% to the upside, and that translates to about 34 points. NASDAQ is going to do better, as you might imagine. It's marked 0.6 to the upside, and the S&P 500 is probably going to tread water and will probably get its sentiment barrier when we find out what's happening with both the Dow and the NASDAQ. But we do have to talk about the U.S. dollar, as I say, trading near 15-month lows on a dollar index basis. Tepid inflation data in the world's biggest economy is one reason. Mixed economic data is another, it has to be said. We don't know exactly what kind of pace of growth we're going to get into the second half of the year, irrespective of the blowout earnings that we're seeing in this second quarter reporting period. But I do think the fact that we are seeing this ongoing turmoil around the White House, which we've talked about in great depth, is a big part of the reason that the dollar is on the back foot. It's being translated into these euro and sterling gains, but you cannot argue or you cannot ignore the implications of this weaker dollar and what it's going to do to corporate profitability. It's probably going to be very uplifting with respect to S&P 500 companies because they're earning increasing amounts of revenue overseas, and they become, of course, cheaper to repatriate as the dollar weakens. You can see it capping gains in euro stocks as well, simply for the opposite reason. And we had a couple of companies today actually warn about US dollar weakness into their second half projections. BAE Systems, a big weapons company here in the United Kingdom that builds certain armored and flying vehicles for the US military, in point of fact, said as much when they beat estimates on their first half earnings earlier today. The shares actually did pretty well. They bumped up the dividend too. It's a nice little story. But nonetheless, the US dollar weakness is a big story. Oil, they're treading water right now. It extended gains overnight after that bigger than expected build in US crude inventories yesterday by the API. It was a little bit more than 7 million barrels to the week ending July 28th, but right now we're effectively unchanged. I think investors are looking for any confirmation they might get from the Energy Administration officials later today when they give us official data on U.S. stockpiles. Of course, come back to thestreet.com and you can get details on that and a whole lot more. But again, it's an Apple story today, and I would imagine it will remain so throughout the session. Shares called about 6% higher, and that is going to mean a record high for the world's biggest tech company, and probably take it over that 800 billion threshold, and maybe potentially take the Dow over 22,000. Heck of a day. Thanks for watching, everybody. This is 5 Before the Bell. I'm Martin Bakkerdax. We'll see you tomorrow.